Okay, can you see the screen? It is visible. Okay,
Yes, sir.
good.
Yes, sir.
Now is 3rd of November. First of all, we have discussed about cash flow statement, the meaning we have written, I think. Yes. Advantage, limitation also we have written, and the types of cash flow we have also written. Yes. So is there anything other part we have already written or not? Like cash flow from operating activities. I have to explain now all three activities and then we will start solving question. So can you tell me what are the additional items we have written? We have written cash and cash equivalent, uh, three categories. Yes. Okay. So this is cash flow from. Good evening. Good evening, Abdullah.
Good evening, sir.
One of you is like disconnected, connecting. Who? Sharuk, Farheen. Okay. Anyone is like coming or going? Okay. So cash flow from operating activities. First of all, in the previous class, I have told you that operating activities means any work that is related to your main business. It is your main revenue generating activities. So if you are doing a business of, let's say, the cold drinks. So if you purchase or sell these cold drinks, so sale of cold drink is your main revenue. But if you are selling your furniture or any machine or something else, then that will be not included in operating activities. In the same way, let's say if you have a furniture business and then you are selling furniture, so it is your main revenue generating activities, it will become under operating activities. So the activities which are directly related to your main operation, that is called operating activities. All the activities related to that. So you can see here, operating activities are the principal revenue generating activities, that is cash inflow and outflow related to main business. So in cash inflow, it is cash received from sale of goods, royalty fee and commission. I will explain royalty fee and commission. Let me read first. So cash received from trade receivable, refund of income tax. All these are cash inflow from operating activities. Cash outflow means purchase of goods for cash, payment to creditors, payment of direct and indirect expenses, and payment of income tax. Okay. Now, when we say operating activities, I have already told you that whatever your main business is, it doesn't matter what is the main business. So, sale of these items and purchase of these items, and also the related activities, because you need employees, you need like salesman, you need office persons, and a production worker. So all these person you need, you have to pay them salary. So salary is operating activities expenses. In the same way, rent of the building in which you are running your business, that is also operating activities expenses. So all these things are part of operating activities. So cash received from sale of goods, Sale of goods means the main item, whatever your business is. So if you are selling the goods or service, it can be service also. So if you are selling goods or service, that is your main business, then it will come under operating activities. Royalty, fee, and commission. Royalty means like if you have some specific uh, item like the design or the book, okay, uh, sometime it is also mines, okay. So if your business is related to any of these things, okay, so if you are like writing book, then the printing company will pay you a fee based on the sale they are making. So that is called royalty fee, okay. So if the price of one book is, let's say, 400, so they will fix that for every book I will pay the writer 40 rupees. So I have this book of like T.S. Grewal. So for every book the company is selling, you can see there is name written below Sultan Chand. Okay. And uh, in the heading, it is T.S. Grewal double entry bookkeeping. Okay. So Sultan Chand is printing company, printing press, you can say, and the T.S. Grewal is the writer. So, for every book they are selling in the market, Sultan Chand has to pay some fee to T.S. Grewal. That is called royalty. Understood? Is that clear?
Yes, sir.
Yes,
Okay.
sir.
So, similar thing is commission. So, if on the basis of your work, if you're receiving some benefit from some other companies, then it is commission. Then cash received from trade receivable. So if you sell goods on cash basis, that is the first point. And if you are selling goods on credit basis, later you will receive cash. So cash received from trade receivable. A refund of income tax means if you receive, if you pay the income tax, which is more than what you have to pay, then the income tax department will refund the money. So that is called refund of income tax. Now the thing is, any item that is written here, it should be in cash. So okay, because if any expenses in on credit basis, then it will not be recorded in cash flow statement because the name is cash flow statement. So we have to record only the cash payment or receipt of any income or expenses. So you have to remember this. And then the cash outflow, purchase of goods for cash, payment to creditors. So for cash and on credit means payment to creditors later. So at the time of payment, you will record it. Then payment of direct and indirect expenses. I told you wages, carriage, freight, salary, advertisement, then rent, stationery, uh, audit fee. All these expenses are related to business. So payment of direct or indirect expenses, and then the last payment of income tax. So income tax payment is outflow and income tax refund is inflow. So these are cash flow from operating activities. Now, as per accounting standard 3, cash flow statement can be prepared by following two methods. First one is direct method, the second is indirect method. Now, direct method is not in CBSE syllabus. You don't have to study this. And indirect method is included. The good part is direct method is easy one, and indirect method is difficult one. So they thought that we will not give the student easy part. So that's why they have
Right.
given you indirect method. Okay, so please write this, the cash flow from operating activities. And if you have any question, you can ask.
वैसे ही कम दिमाग खा रहे हैं बच्चों का जैसे
What?
कुछ नहीं नथिंग सर
Okay, please write this. Do it fast. and tell me after you have completed this.
So also there's one thing, right?
Yes,
Like in operating activities, the first thing is profit before tax, and it includes difference in statement of profit and loss account, transfer to general reserve, and provision for tax current year, proposed dividend current year, interim dividend, and then minus refund on tax.
but right now we are not discussing the practical part. That is in the format. I will explain everything.
Okay.
We are discussing
Okay.
the theory part only, means what are the inflow and outflow of these items, what is the meaning of operating financing, or we are not discussing any practical part here. First we will discuss one by one all the theory, means meaning of all these activities and inflow and outflow of all these activities, and then we will start solving, like start discussing how it is prepared, like financing activities, then investing activities, and then the operating activities, then the combined cash flow statement.
Yeah. Oh my. Okay. Thank you.
If I just reach the main cash flow statement, then I don't think that you'll understand.
So we were doing the combined cash flow thingy in our class today, and even the toppers were like, "Oh my god, this shit's crazy."
So it is, yes, difficult one. So
Yeah. Also, we have to prepare accounts, right? If there are more than three entries of something. Yeah. So it's really tough.
yes, there are some related. I actually, if any item related to any item, there are two, three information given, additional information. Then we have
Yeah.
to
Yeah.
prepare.
Yeah. So do you have a class after this?
Yes.
Okay, fine.
Why?
No, just I was asking because I mean, if you didn't had, so I could like talk, you know, but it's fine.
Done? Is this completed?
Yes, sir.
Okay. So now, after cash flow from operating activities, there is cash flow from investing activities. So cash inflow and outflow are related. Anyone who has not completed, you can tell me so that I can show you the screen again. Okay, no one. So cash inflow and outflow related with acquisition and disposal of long-term assets and investment which are not held for resale. Okay. So when we talk about long-term assets or investment, so either purchase or sale of these assets comes under investing activities, and any other related activities of these uh, related with these activities also come under investing activities. Like if we purchase any building, okay, so that is investing activities. Now, if we let it out on rent, so we will receive rent. So rent received is also investing activities. If we are depositing money into the bank, that is investing activities. And if we receive interest on these bank deposits, that is also investing activities. Okay. Then uh, any machine we are purchasing, okay, and if we are selling it later, then that is also investing activities. So all these activities of sale purchase of long term asset and investment and other related activities are included in investing activities. So you can see in cash outflow, first we will discuss the outflow, payment for purchase of fixed assets and payment for purchase of investment. Okay, so if you are purchasing investment, if you're purchasing fixed assets, so investment means fixed deposit, investment in shares, investment in debentures, all these things. So these are cash outflow. Now, if you purchase investment, so if you purchase share, you will receive dividend. If you purchase debenture, then you will receive interest. If you purchase any building, then you will receive interest, rent. So proceed from sale of fixed assets, proceed from sale of investment, then rent received, interest and dividend received. These are investing activities. Please write this. So, whenever we say investing activities, it is always related to non-current asset part of the balance sheet. If you remember the format, so there are two assets classification, non-current assets and current assets. So investing activities is always related to non-current assets.
So in this fixed assets, there are intangible and tangible both are included, right? Basically.
In fixed assets,
Yeah, yeah, yeah.
yes, fixed assets, tangible, intangible, both are included.
Okay. Also, the investment is supposed to be non-current investment, right?
Obviously, it is non-current
Okay.
because I
So,
just said that it is mostly not mostly. I said it is always related to non-current part, non-current assets.
oh, okay. Sorry, I didn't hear it.
So under non-current assets, it is only non-current investment. Because
Hmm.
current investment, if you remember, I have written current investment in cash and cash equivalent.
Okay, okay. Say, thank you.
Please confirm after writing.
Done, sir.
Okay. So after investing activities, there is this last activities, the third one, cash flow from financing activities. So what does it mean by financing? Finance means money. Okay. So for your business operation, you need two kind of funds. One is called fixed capital, one is called working capital. Anyone know this? So working capital is for
Yes.
your day-to-day activities, like for daily operation expenses. So day-to-day activities, you need this type of capital to pay salary, to purchase raw material. All these things are done with the working capital part. Now, fixed
Payment of
capital,
wages.
what?
Yeah, I mean, same thing. Sorry, nothing.
So for now, who disconnected again? Okay, who disconnected? Okay, so for fixed capital, actually someone disconnected again. So for fixed capital is for long term, like purchase of machine. We need these kind of capital. Okay, so purchase of machine is investing activities, but for purchase of machine we need fund, and where these fund will come from. So that is where we talk about fixed capital. Okay, so for long term investment in business. So
Like,
you can say it is
which
for more than 2, 3 year, 5 year, 10 year. But in working capital, it is for like 5 days, 10 days, 1 month, 3 months, 6 months, whatever it is, less than a year. So calculation of working capital, you know already, current assets minus current liability, it is working capital. So current assets and current liability, it is part of balance sheet. So there are total four headings. Actually, generally we count three. So one is shareholders fund. One is shareholders fund. The second is non-current liabilities, and third is current liabilities. Now, in the asset side, there is non-current assets and current assets. Now, current assets and current liabilities, it is mostly related to operating activities. These two, operating part. Okay, working capital, current assets minus current liability. Now, non-current assets, we have already discussed that it is investing activities. Investing activities is related to non-current, and this shareholder and non-current liability will come under financing activities. Means from where we are getting finance, from where we are getting money for our business operation for long-term purpose. So it is share capital, it is long-term borrowing, loan from bank or debenture or something like that. So share capital, loan from bank, debenture, bond, public deposit, all these things come under non-current liability. So shareholder fund and non-current liability. If there is any increase or decrease in these things, then it is related to our fixed capital. And obviously, a fixed capital is financing activities. So, under financing activities, you can see here cash inflow and outflow related to raising funds. It results in change in capital structure. Capital structure means like how much fund we have raised from capital, share capital, how much fund we have raised from loan, non-current liabilities. So, capital structure. We are not including current liabilities because current liability is part of working capital and also the operating activities. So only shareholders fund and non-current liabilities. So inflow, proceeds from issue of share, proceeds from issue of debenture, borrowing of loan. So all these we are getting funds by issue of share, for issue of debenture, taking loan from bank. Then now, there are some activities related to this because if you are issuing share, then you have to pay dividend. So, dividend payment is financing activities. If you are issuing debenture, then interest you have to pay. So, interest payment is financing activities. Borrowing of loan. So, if you take a loan, then you have to pay interest again. So, that is also financing activities. Now, if you are issuing like share, issuing debenture, borrowing of loan, then you have to repay these amounts. So repayment of debenture, like redemption of debenture, it is called. So redemption of debenture will come under financing activities. Repayment of loan will come under financing activities. Buyback of share will come under financing activities. Redemption of preference share will come under financing activities. So you can see here, all these things are written here. Also the interest on long-term borrowing and interim or final dividend. So this is cash inflow and outflow. I think any one of you have told me that you have some problem in financing activities.
Yes,
Anyone?
sir.
Maria. Okay. So is it now clear, Maria? The activities, you understand what will come under financing activities and what will not.
Yes, sir.
Okay. I think you have problem in practical part, yes?
Yes.
Or the theory also.
No, just the practical.
Okay. So write this. We will discuss the practical part also after like completion of all these. We will discuss some practical part also.
Done, sir.
Okay. So all these operating activities, financing activities, or investing activities. Tell me if any of you have any doubt in these. Any question?
No, sir.
No, sir.
Okay. The remaining one have some doubt. It means
No, sir.
No, sir.
okay. Okay. So still, some of you have not given any answer. Okay. So now, if the question will give you all these things in this way, like we have written in the financing activities inflow or outflow, then investing activities inflow or outflow, and then operating activities inflow or outflow, then there is no problem because it will be very easy to find out these items and write it. But they will not give you in this way, like they will not write purchase of share or issue of share. They will not give you this purchase of machinery, sale of machinery. They will not write like this. What they will give you is the information of current year and previous year. Like they will give you
Yes,
2024-25 and 2023-24. Okay. Now they will give you share capital,
yes, sir. We did questions like that today.
5 lakh and 7 lakh. Now it is also simple. You can find information from this. But now, after this, they will give you securities premium reserve, which is 1,25,000, and here it is 50,000. Now it will get confusing because you think that okay, there is an increase in share capital 2 lakh. It means we have issued issued share of 2 lakh. So it is an inflow. That is very simple, but it is not correct because we have studied the share capital. Security premium capital, if it is increasing, it means we have issued either share capital or if there is anything else like debenture or preference share. So it means it is issued on premium. So not only 2 lakh, this 75,000 is also added here. This is your inflow, 2 lakh 75,000. Okay. So same with the debenture, they will give you the opening balance, closing balance. They will give you the rate of interest, obviously. Then they will give you the date of issue or redemption, so that you can calculate the dividend or interest. In the same way, if we talk about investing activities, then they will give you, let's say, machine. So, in the beginning, machine in the previous year, machine was 10 lakh. Now it is 12 lakh. It is also easy. Okay, machine is increasing, so it is purchase. Now, it is easy so that they will not give you the information like this. Board never do this. Okay, CBSC has this tendency that they will make question little bit difficult. without making it difficult. They don't have this like peaceful mind. So what they do, they will give you that one machine costing rupees 10,000. 10,000 is very less amount. Costing rupees 3 lakh, sold at a profit or loss maybe of 50,000. Okay. So this is also easy. This is also easy. So they will add some more information in this. Like they will give you provision for depreciation account. They will give you the purchase date of this machine and the depreciation charged on this machine. So now it becomes difficult. Now you have to prepare the account of machine. You have to prepare the account of provision account, like provision for depreciation. So after preparing all these accounts, you will find out about depreciation, you will find out about the purchase of machine and sale of machine, and then you can write. Also, some student calculate this purchase and sale and forget about depreciation. The depreciation you have calculated in machinery account, it will go to operating activities. Okay, so there are many related information which they will give you. If you're only preparing financing activities, it is very easy. If you're only preparing investing activities, it is also easy, and same with the operating activities. But if you are preparing all three combined, then you have to see all the information, that where it will go or it will be removed. Okay, like interest paid, it should come under financing activities, but it is also adjusted in operating activities. Interest received or rent received, it should come under investing activities, but it is also adjusted in operating activities. So you have to see all these. You have to, like from one information, you have to understand that where it can go. Then only you can solve the question properly. Otherwise, it will become very difficult. So one by one, we will discuss all the format, all the activities, and then we will complete the whole quotient, like cash flow statement. Okay. So first, I'm starting with cash flow from financing activities. Actually, I don't think that we will be able to solve a question now. Cash flow from investing activities will be better. So the format we have to prepare, inflow outflow. If you understand inflow outflow, then it is very easy to prepare the format. But you have to identify all these things, like where is the purchase or sale of machine, purchase or sale of building. So it is particular amount and amount. You will write the heading cash flow from investing activities, and under that we will divide inflow and outflow. So outflow, there is only two outflow we have written. It is financing, it is investing. Yes. So these are two outflow. So payment of purchase of fixed assets, then payment of, sorry, payment for, not of, payment for purchase of fixed assets, payment for purchase of investment. Then sale proceeds from fixed assets. So either you purchase or sell the asset, it will come under investing activities. Then proceeds from sale of investment. So purchase sale we have already written. Then there is rent received, interest and dividend received. So all these will come under inflow. So you will write these amount in inside column, calculate the total and then write it outside. So inflow will be added together, outflow will be added together and then written outside. Outflow will be deducted from inflow, and if you are getting positive result, then you will write cash flow. If it is negative, then you will write cash used. Okay, so cash flow from or actually cash used in investing activities. So this is the format of investing activities. Actually, when we will prepare the whole format, this part will be included in cash flow statement, the same part. So if you understand this properly, then no need to remember it again at the time of preparing whole cash flow statement. So that's why please write this. Please write this. We will complete some question in the next class of investing activities because very less time left. Complete it and tell me. Done?
Done, sir.
Okay, so is there any doubt you have? Okay, so if you have completed and you don't have any doubt, then that's all for today. Thank you.
Thank you, sir.
Thank you, sir.
Bye.
Thank you,
Thank you,
sir.
sir. Bye.